The next bull market, brought to you by Nvidia. There are some really interesting and likely uncomfortable conversations happening all around the financial world this weekend. From my perspective, Nvidia just rang the dinner bell for bullish money managers everywhere. Technology, AI, and the next industrial revolution are already unstoppable, and very soon they'll be undeniable. But they're not there yet. And that's why there are still bears out there. Here's the thing though, they're trapped. They've been expecting a downturn in the market for a while, and a lot of them actually piled into a debt limit trade that expected that the market would have to collapse to some degree before any kind of agreement would be reached. Anyone who made that trade is feeling pretty upset right now. There's, a lot of wealthy people who have influence in the financial press and who have become deeply committed to the bearish story. These are the same folks that have been calling for an imminent recession for the last year and a half. But that story just has not been coming true, at least not in a really clear-cut way. And personally, I think that tech and growth stocks have been a little unfairly hit by this unwillingness to recognize the future. But I can admit, NASDAQ earnings have sagged over the last year, and it's been tough to find the short-term numbers to really support a bullish tech argument. So the hits have kept coming, even as companies have reiterated how strong the second half of 23 and full year 24 has been looking for them. So this is where we are, at the turning point. Nvidia just hit the whole market over the head with numbers that shout, this is real. And now we get to watch the bears struggle to explain why the market would fall from here. Who out there would really take a serious look at what's happening in the American technology sector and then turn around and tell their clients, we expect the market to fall from here. We expect the market will end the year lower than it is now. Come on. Problem is, there are people who are saying that. There are people that don't see the importance of technology or who are simply blinded by existing assumptions. And they've positioned significant capital and risk into a bearish strategy. These are, smart, serious people who are either short the market or are long defensives. And this week's move have put them in a very uncomfortable spot. And not just uncomfortable because they might be getting squeezed, but also uncomfortable on their client relation side, where if they haven't been positioned for this, now they have clients asking them, why didn't I participate in this rally? Why didn't I have some of that tech stocks that you told me weren't going to rise? Now their clients are going to start pressuring them to shift from a bearish strategy into a bullish tech-heavy strategy. So the wiser among them can see that shift. They can see that the market has turned bullish and is going to be led higher by tech. But they still need to exit their short and defensive positions. So we hear them trying to drive a temporary downturn over the next couple months so that the market will give them a less painful exit from their shorts. And they say that that will be before the market then picks up in 2024. Almost everyone agrees that 2024 is looking to be a very strong year. And it's almost enough to make you wonder why they wouldn't simply say, invest now and ride it the whole way. So what are the conversations being had this weekend? Well, there are two main flavors happening all around the world. The bears are feeling that squeeze, and they're trying to hype the next downward catalyst. For the moment, they seem to be trying to encourage the Fed to intervene and halt this rise in equities. Make it stop. Thing is, the Fed can't stop big tech. The Fed can't stop the future. But they can make things difficult for more traditional investments. That's absolutely true. The bears need the market to go down in order to clear out their bearish positions and avoid painful losses. Bulls, however, are happy, and in fact, they're getting aggressive. As the year goes on, tech will continue to amaze. We'll see it at Apple's WWDC just soon here on June 5th. Among bulls, there's beginning to be an understanding that we're not going to revisit the lows of October and December. We may, in fact, leave behind the 4,200 level that we've been at for some time. These are the folks who are saying buy. These are the folks that are telling their clients who have money on the sidelines that, okay, now it's time that we can start to safely invest in tech because we're seeing the revenue growth and we're seeing a runway. Granted, a lot of us have seen that for a long time before, but now it's becoming real. So the coming week is going to be an amazing fight The bears are cornered, and they're going to use every tool and every pronouncement that they can find to try and break this market down. One particularly worrisome tool is the Wall Street to Washington, D.C. connection. Attempts to influence Congress and the Fed might get messy, but in the longer term, that is 4 to 12 months, the bulls have a strong advantage, and the earnings narrative is going to support them all the way there. I mean, we've already seen it. Thanks to Nvidia, everyone has already heard the bull narrative, and it's going to continue to be reinforced. As other tech companies come out, they're going to be saying how we agree with Nvidia, we're buying Nvidia's things, and these are how we are also participating in the essentially Industrial Revolution AI rally. So we're going to be hearing that from essentially every meaningful market participant, and it's going to be very, very difficult to keep on denying. So here from my foxhole, and this isn't advice, this is just what I'm doing. Any short-term dip which isn't connected to essentially international disasters is going to become a buying opportunity. And anything that I trim off stocks that are ripping, I'm going to immediately reinvest in other companies which have not yet met the or caught the market's eye. I expect the market's current narrowness will be resolved in the next few weeks and months by the many rising to meet the few. And I do expect we'll see better market breadth as this story starts to develop and we squeeze the bears out. I do think that mid-cap and small-cap stocks are an interesting place to be right now, largely because of that. However, big cap stocks are not going to find any real reason to drop, I don't think. Also, I'm currently, for what it's worth, in the no landing camp. This is just speculation here, but I do think that it's possible that bullish money managers are preparing right now to jump in on Tuesday. And that will be after Nvidia's keynote address at Computex this weekend, and it will still be before Apple's WWDC on June 5th, where they're expected to unveil their VR AR device and probably introduce the market to a few use cases or killer apps that people haven't really thought of before. So it should actually be a pretty interesting event. But the thing is, there's going to be bullish money managers who are hearing from their clients, who are hearing from each other, who are digesting the week over this long weekend. And a lot of them are going to come to the conclusion, the correct conclusion, I believe, that, hey, we need to participate in this rally. We need to get into tech. And if we already had a little bit of tech, but we were underweight, now we need to at least equal weight that. So there should be money flows going into the technology sector after people finish up these meetings this weekend. And that'll also, as I said before, be a little bit client driven by people saying, I want to see exposure to this in my portfolio. So you combine that client-led money flow with the fact that there are bearish positions which are vulnerable to being squeezed, that bullish hedge fund managers can look at, and they're probably pretty tempting right now. That you can not only jump in and participate in a rally, but in so doing, you can also squeeze the bears and create a larger rally in the process. I think that that's going to be a pretty tempting target for a lot of hedge funds out there. So come Tuesday, we are going to see an incredible fight, but there could be a lot of money entering the market that's been waiting for a signal like this, especially with the debt limit. With the debt limit potentially being on the path to resolution, there should be fewer things to stop people from jumping in. So you have all of these forces that should add money to the market and drive a rally and squeeze the shorts. That's what I expect to see on Tuesday. But the bears have a lot to lose, so we'll see what they do. In short, I think that the next bull market is here now, and that its only real threat, in the short term at least, is actually not a market threat, but a political threat, since that is what might actually destabilize this narrative and do something that would frighten investors more than they are currently excited by technology trends. So I do think that over the next week, there is going to be, a lot of people being very publicly proven wrong about all the things that they've been saying for the last year. I just hope that I'm not one of them. Good luck. Thanks for watching.